Hey everyone, welcome to Bald Guy Money. I am Bald Guy, and back in January, I revealed to you all what percentage of my total net worth is in gold and silver. And just as a reminder, here are those numbers, and I've updated them to reflect the current increases in the prices of gold and silver. And as you can see, I have a little more than 8% of my total net worth in metals right now, with about 71% of that dollar value in gold, with a gold to silver ratio of around 30 ounces of silver to each ounce of gold. So that's just a little background into how I stack, but I often get the question, if I am such a believer in the importance of stacking precious metals, why don't I have more precious metals exposure? Why isn't, for example, 50% of my net worth in gold and silver? And although I agree from the percentage side of things, I may be slightly underallocated at the moment to metals, and that's probably because of the gains I've had on real estate over the past years that have outpaced metals. That 8.2% of my net worth is still within range of what I think someone my age should have allocated to metals. And just as a reminder, here is an updated table from a recent video I did showing how much of a person's net worth I think should be in metals based on age, including a gold to silver split and gold to silver ratio based on current prices. Now, having done some videos recently showing how gold and silver have performed at the low prices, at the average prices, and at the high prices over the last 15 years, many of you have asked me to compare metals directly to stocks, the S&P 500. And I think that's a fair comparison that everybody out there who stacks metals should see and be aware of. Because the reason I am not 50 or 60% allocated to metals is because I also seek growth in other areas, including the stock market. So I wanted to make this bonus video for everyone to explain the different roles that metals and stocks play in my portfolio. Then I want to show you something that you all requested, which is a detailed comparison of how gold and silver have performed versus the S&P 500, and I am 100% certain you will find that analysis very interesting, especially if you've liked my last few videos. And then I want to finish up by telling you all about what sectors I am currently invested in when it comes to the stock market and what sectors I've sold out of. To let you all know not only how I see the market right now, but how I am playing the market. And I will be talking a bit about mining stocks for those of you who are interested in the topic. So be sure to watch the entire video because you may be shocked at the data you're going to be shown here. Okay, so jumping right into it, and I'm bringing up a list of the top 10 assets by market cap here on the screen. And the reason I'm doing that is because I want to show you that gold and silver are what I like to call blue chip. And what I mean by that is, just as you would call a company that is stable, reliable, and has a solid business model a blue chip or first-class company, silver and gold have been a reliable store of value for many years, thousands of years in fact, and that's despite a changing business and technological landscape that has resulted in numerous changes in the companies on the list over the past 100 years, this list that you're seeing here over the past 100 years. Gone from this list are the Kodaks, which failed to innovate, and General Motors, for example, which shrunk due to competition from Asia. In fact, we don't have to go that far back to understand the point I'm trying to make here, because this list on the screen, I've just changed it up, is the same list, but from December 2020, and you'll notice that it doesn't have NVIDIA or Bitcoin on it. Two examples of how quickly technology can push the value of an asset up. And other than showing us how quickly, for example, technology can change things in the market, what this shows us is that no matter how much we've evolved as humans over the past 5,000 years, there simply is no substitute to silver and gold. They're right here on the list, as they always have been and as I expect them always to be. And I'll keep this up on the screen for a second for you to look at, but this shows exactly what role gold and silver play in my portfolio. They're slow and steady growers, not intended to make me rich, but there to make sure that no matter what happens, I have enough to take care of myself and take care of my family, because if all else fails, whether that's technology, the housing market, or even the US dollar itself, I can always rely on gold and silver to be worth the value of the labor that I put into it to get it, if not more, and that helps me sleep at night. I'm not going to lie on that one. Now, when it comes to stocks, and here's a list of the top 10 performing S&P 500 stocks as of May 1st, 2024, the fact is, if you hit the right sector at the right time, you can significantly increase the value of your investment and use the money to tangibly improve the quality of your life. And I've said that on this channel for a couple years now, because I know a lot of you out there, especially those of you who have read, for example, the book The Great Taking, are very skeptical when it comes to stocks. Now, I have to admit, I haven't read that book. I have heard some of the arguments presented in it, and what I simply have to say on that is I still believe the stock market is a great vehicle to grow wealth and, again, as I said, tangibly improve the quality of your life. And I know that firsthand because I was buying NVIDIA, which is here on the list. I was buying it back in 2022 for under $200 a share. Now, I've sold out of it since then, but I used what I made and converted it into tangible assets, which is something that I preach here. So when it comes to stocks, the role they play in my portfolio is taking on a bit of calculated risk to get faster growth than I would typically get from other assets. And once I've realized that growth, meaning once I've taken the profit, I take those profits and I convert them into tangible assets. So I hope that makes sense for everybody so far. Now, moving on, I want to show you all some numbers of how gold and silver perform against the S&P 500, both for the past 15 years as well as so far in 2024, with some commentary on where I think they're headed. But just before we continue, I want to introduce you all to the sponsor of this video, Rua Gold. They are a New Zealand-based gold exploration and discovery company operating in a historical mining area that is experiencing a bit of a rebirth since last year under New Zealand's new government, which is supportive of mining in the country. And this comes after years of anti-mining governments there in New Zealand, and that probably explains why Rua Gold is trying to get the word out about what they're doing now, because this is a big shift that has a lot of potential and has a lot of people excited. Now, what makes this company interesting, in my opinion, is not only that it is in a stable jurisdiction, and I know that matters for many of you who are worried about nationalization of mines, so keep in mind that New Zealand is a country with low corruption that respects private property rights, but what also makes this project a good one to check out is a proven history of quality. And what I mean by that is the properties that Rua Gold holds the rights to are mines that have historically produced from 15.6 grams of gold per ton of ore all the way up to 53 grams per ton. And if you're not familiar with what that means, I've added an image here on the screen that shows you that on average, a gold mine produces around 1.18 grams per ton of ore. And that's to give you some context on just what kind of quality we're talking about when it comes to these New Zealand mines. Because when it comes to high-grade mines in stable political jurisdictions, they are not so common. Now, when it comes to the management team, I want to point out that the chairman and largest shareholder in Rua Gold is Oliver Lennox King, and he has a great track record in developing mines and even sold a project he helped develop to Newmont once upon a time for $2 billion. You can also see here they've got CEO Robert Eckford on board, who is rumored to have taken a pretty big pay cut from his previous job in the mining sector to join Rua Gold because he has high conviction in the project and sees a huge potential for equity upside in this opportunity. And another notable person involved with Rua Gold is Eric Sprott. You may recognize the name. He is a Canadian billionaire and longtime gold bull, and he is also a shareholder in the company. As it stands today, Rua Gold is getting ready to start drilling in these properties, and they are seeking investors to get things off the ground in a project that, again, has low awareness because mining in New Zealand was restricted by the previous government. The market cap of the company is low, extremely low in my opinion, at around 26 million US dollars, which is significantly lower than its high-grade first world peers, as you can see in the chart here. Now, this is a timeline of what they're up to in 2024, and if you want to learn more or get some exposure to this project, please check out their website. The address is on the screen, and you can also look them up under their ticker symbols, also here on the screen. And just before we get back to the analysis, I want to thank Rua Gold for supporting the Bald Guy Money channel, as what I do would not be possible without companies like Rua Gold, so thank you very much. Okay, so getting back into it, here are the numbers I promised, and we are looking at nominal returns, so not adjusted for inflation. If you bought 1 ounce of gold versus 1 ounce of silver versus the S&P 500 index at the lowest price, the average price, and the highest price each year for the last 15 years. Now, if you look at the data on the left, so the return on buying the lowest price of these assets, you can see that the S&P 500 gave the highest return at 125% over 15 years. And that's also true if you bought the average price of all three assets over the last 15 years, with the S&P 500 returning 96% versus 58% and 44% for gold and silver respectively. And the same even applies when you look at the returns you would have gotten purchasing the high price of each asset every year for 15 years. So the fact is, when we look at this analysis, the S&P 500 wins across the board. And as I switch over to the inflation-adjusted data for you all to take a look at, this is a strong message to those of you with 401ks or some IRA money in the stock market. There's no shame in having money in the stock market. It's a fantastic way to grow wealth if done correctly. I do it myself, and I'll share some thoughts on what I think the correct way is in a moment. But before that, I want to say, as great as it can be riding the stock market up, I never allow it to be the only thing that I rely on. Just like I wouldn't drive a car without a seatbelt or jump out of a plane without a parachute, I never neglect having real tangible assets in my possession and in my control as an insurance policy against the unknown. And I think that's why we're seeing silver and gold outperform the S&P 500 so far in 2024. It's because people are realizing the blue chip qualities of metals and are waking up to the fact that the economy and financial system are very fragile. From my point of view, most stocks are likely topping out, or at least their growth rate is slowing down. Insiders are selling stocks at high levels again as unemployment goes up, and the world is scrambling for an alternative to the US dollar and US treasuries, not only because of continued inflation fears and out of control US national debt and US national spending, but also because of the consequences related to the weaponization of the dollar. And what that has given us is an amazing setup for metals to succeed in a way that we haven't seen them succeed in a very long time. And circling back to stocks, it's why I got out of my riskier tech stocks in the summer of 2023. I even did a video here on the YouTube saying that I'm selling stocks and I'm running to gold. And what I did when I started doing that is I started to shift that money into mining stocks. And when I referred to what I think the correct way to play the market is right now, that is exactly what I am talking about. Because with metals prices continuing higher, the first quarter earnings from the miners will look modest compared to what we see in the second quarter, which should drive valuations, at least in my opinion, up even further from where we are today. And with mining stocks so far off their all-time highs, I mean, they were in a 10-year bear market, and I've talked about that in numerous videos, there is still a lot of room for them to run. Room the S&P 500, which is basically at its all-time high right now, simply doesn't have. So to all of you who asked me to compare gold and silver to the S&P 500, I hope this objective analysis of their performance was helpful in whatever it is you wanted to see it for. Now, if you'd like to see me compare gold and silver or even stocks to other asset classes, please let me know in the comments section now. I would love to keep taking this channel in a direction that is viewer driven, so please don't be shy and let me know in the comments section what it is you want to see. And with that said, that's it for this video. I thank you all for watching. I thank you all for the likes, the comments, everybody who's sharing these videos. We are growing very quickly, and this bald guy money message is getting out there, and I'm very grateful for all of you who have been supporting me over the past few months as we've started growing, and especially to all the people who have been supporting me over the last few years. Again, thank you, thank you, thank you. I'm wishing you all a fantastic day ahead. See you in the next one, but before I sign off, I have to say, take care of yourselves and take care of each other, everyone. Goodbye.